Hey, I'm Russ Knopf, and welcome to Stashing Worthy Acorns. Thanks for stopping by and spending some of your time with me. I got to give props to my daughters on that intro. Ivy's 12, and she helped me create the logo, and Josie's 11, and she was in on the creative collaboration. So girls, thank you very much. It's an awesome intro. So what is Stashing Worthy Acorns? This is an investing hobby that I began a few weeks ago after I'd been on Twitter and saw people talking about Stash app or Worthy Bonds app and showing portfolio balances. And I wanted to see what it was all about. I'm not a beginning investor. I've been a dividend growth investor for some time now, but I know there are a lot of people that want to begin investing and they're not quite sure how or the best way to go about it. So if this helps in any way at all, then cool. We'll both learn something and get some value out of it. So I'm Russ. I was born in the Chicagoland suburbs. Lived here my whole life until I graduated high school, went in the Navy, was aboard the USS John C. Stennis, worked as a machinist mate, so shout out to all the MMs. And I came back here in '99, and I've been working as a service tech and an installer of commercial loading dock equipment and overhead doors ever since. So let's get into the nuts and bolts of how this works. So Warren Buffett has one of my favorite quotes of all time on investing and not trading hours for dollars. He says, "If you don't find a way to make money while you sleep, you will work until you die." I love that quote. What that quote says is, if you make a table, however long it took you to build that table, when you sell it, you're compensated for it. But if you write a book or teach a course or create an online course on how to make tables, then yeah, it took you work to make that book or that course, but it's done, and now people can buy it indefinitely. And whenever, you don't even have to be awake, people can buy your book or your course, and you'll get paid money. Hence, you're making money while you sleep. I like dividend investing. I might get into later on the channel. And then if you don't understand anything to invest in, use that money you're saving and learn new knowledge. Udemy, Skillshare, there's people selling their knowledge everywhere online, and it's amazing. It's wonderful that you can just pay somebody for knowledge they have, and it's almost like a life hack, like a cheat code. And then you're going to use that new skill, take and invest money into something that will bring you income while you sleep. Yeah, so these three apps are small steps to me, but they get you going, they get you that taste, they dip your toes in the water. And another quote I love from Lao Tzu is, "A journey of 1,000 miles begins with a single step." Perfect. You got to take that first step. It doesn't matter how small it is. If it's $10, just get yourself on that path. And that's what I'm trying to show you guys and girls here. There's ways. There's very simple ways for beginners to learn to start investing. And that's why I created Stashing Worthy Acorns. It's play on words, obviously, from the Stash app, the Worthy Bonds app, and the Acorns app. So my purpose of this whole thing is just to see, it's a hobby I'm creating, getting into here. I'm gonna run this for at least 2 years and see which one performs the best, which one has, which one I like the best. I'll be giving my opinions, weekly updates, starting with a $50 initial investment. So I messed up on Stash because they gave me some money for free for joining. It was kind of like a randomization that they chose. I actually put in $38.03 instead of the $50 initial investment. So I just discovered this as I was making this, and I'm going to be adding 12 bucks this week to bring that up. So I initially wanted to do $5 per week into all three, on top of that $50 initial investment. But that's not going to be possible because Worthy Bonds is in $10 increments. So I'm going to buy 2 bonds a month. So that'll give me $20. Acorns and Stash will still total $20 a month. So $5 a week, $20 a month. And then we're going to see what comes out of it after a couple years. And I'm planning on using that money towards a family trip we're looking at taking to Europe in the summer of 2022. So it's kind of a little side hobby. We'll see which one of these performs the best over that span of time. So it'll be interesting. First up is Stash. Stash is like I said, it's for beginners. It's the most in-depth of the three that I'm using and reviewing. Little card I made up. Yeah, so it gives you guidance on how to learn and to invest. Try to help you select they'll ask you a bunch of questions when you sign up, educate you, get you, make you aware of ETFs and individual stocks. It's definitely the most in-depth of the three. There's no minimum balance, no inactivity fees. Just be aware that if you have individual ETFs or stocks, if you did want to transfer to, say, Charles Schwab in the future, they would charge you $75 to transfer those stocks to another brokerage. You can always sell them and go into cash and then just move the cash into your bank to get away from that. So the most basic account is what I did. They charge $1 a month. There's other options if you open up a retirement account or a custodial account. If you want to open up an account and manage it for somebody else, those are a little more. There's no fee for individual stocks, which I like. I'm not a big fan of ETFs. They do charge a small fee on the ETFs, and then they have which ETF is just a basket of stocks. It's just a group of stocks. They're a little bit more money because they have to be managed and run. So I'm not big on ETFs, but hey, a lot of people love them, so more power to them. They have about 200 individual stocks and 60 ETFs. You even can buy fractional shares, which is what I'm doing. It costs $5 minimum to buy a fraction, to buy a portion of a stock. You don't have to buy the whole thing. So if you're looking at a $200 stock, you can buy $5 worth of it and own a portion of that. Yeah, they have fractional shares. They'll also reward you. They have a pretty cool thing called stock back. So if you were to, I think, shop at Apple, if you buy an Apple product, then they'll kick a percentage back of that to you in fractional shares of the companies, which is a neat idea. They also have a spend account where they'll give you a debit card that's you can see is used at 10 million plus businesses. Auto stash is what. So all three of them do this. They do roundups. If you spend $1.50, they'll round it up to $2, and they'll take that 50 cents and they'll deposit it automatically once you sign up for that and link that. So you can look through Stash. I'm not going to get into all of it. They have a lot of options there. You can see the requirements that are for Stash. This is the 1891 they gave me, which was cool. Yeah, it was completely randomized. If I remember right, I had to click on this box and it just gave me a randomized reward or a gift they call it. So I had to add $5 and open up an account, complete it. $5 in, they gave me 1891. So I got that money and I invested it right away. That was a nice little surprise. I'm doing the beginner all the way over on the right there. Buck a month. You can see everything that they give you and they don't give you. Yeah, they obviously want you to spend more with the $9. So yeah, I just went with $1 a month. I paid it all up front, so I paid $12, and I'm good for the whole year. There was no discount for the year, but yeah, they let you start off with an amount right away. I tried to do $50. I screenshotted this when I was signing up. I don't know what happened. I did not do that. So I would suggest, yeah, at least $20. Give yourself a little bit of a base, something to start with. They ask you a whole slew of questions, and they give you a starter portfolio based on the questions you answered. This is their recommendation. I X'd out of all of them. I didn't invest in any of those because they're all ETFs, and there's a lot to look at on Stash. It's quite a bit for a beginner, but if you want to be into it and you want to learn a lot, then definitely Stash is the way to go. This is what I picked on Stash. I just went with 3 really safe and secure companies. They pay a dividend. A dividend is every 90 days, usually. A company, when they have a lot of money, they'll kick it back. Some of their profits they'll kick back to the shareholders in the form of a dividend. It's not guaranteed. They don't have to pay it, but companies are known for dividend growth and growing those dividends, and investors really look for that and keeps their people holding on to the shares. So I just went with Johnson & Johnson, Procter & Gamble, and Apple. I'm going to ride with those for 2 years through the ups and downs, and we'll see. I'm just going to keep dispersing the money evenly between the 3, try and keep them close, growing. And then as you can see, I toggled through the settings to reinvest the dividends. So every time, say Johnson & Johnson pays their dividend, that little bit of money I get, they'll reinvest it right back into more Johnson & Johnson shares. So so you're earning, you're compounding that dividend, which I'll definitely be covering a lot on the channel. And then this is after almost a few weeks, 47.69. So originally I started with 38.03. It should have been more. I've already put 10 bucks in. Two of my $5 weekly investment has gone in. So this will be bumped up next time. So, but you can see I'm down 0.34%, which yeah, it's not terrible given how bad the market's been here with the pandemic. All in all, it's these big companies like this, these big world-class blue chip companies, do sustain a lot better through downturns. Next up, Acorns. I think a lot of people are familiar with Acorns. I actually used Acorns around 2017, saved up I think a few $100, and then I ended up going into Robinhood because I wanted to get more into choosing my own stocks to invest in. But it was definitely great. I definitely liked it. It's similar to Stash, no minimum balance. It does require $5 for the first investment, just like Stash. Same thing, $1 monthly fee. But if you're under 24 and in college, it's free to use. I'm not under 24 and I'm not in college, so I was not able to take advantage of that, and I don't know how you go about that, but it was on their website when I was researching all this. Same thing, they offer retirement accounts for $1 a month more, which is cheaper than Stash. And then they also have a spending account where I believe they give you a debit card. Same thing, you can round up, but they offer multipliers, which is kind of cool. Yeah, same thing, daily, weekly, monthly deposits. Yeah, with that spend account, you do get a checking account with a debit card. So what I did with Acorns is I went aggressive. I want to see what happens over a few years going with risky and being aggressive. So basically what they do, yeah, they give you ETFs. It's all ETFs. You don't pick them. That's why this is a little more hands-off than Stash. You just pick if you want how you want your portfolio to be. If you want it aggressive, moderate, conservative, less risky. For the fun of this, for the experiment, I just went as aggressive as they offer, which gives me a lot of. There's no bonds in it. Bonds are very safe. They don't grow as much, but they don't drop as much. But yeah, so we're gonna say screw it and go risky here. Now I had to grab this from so their mobile app and the website are a little bit different, and I had to grab this from the cell phone. You can see, so each one of these dots is one of their 5 portfolios that you can choose from. You can switch it at any time. If you click on this where it says large company stocks, it'll bring you to this screen where it shows you the fund holdings. So this one is in the S&P 500. That's 500 companies that you're diversifying across. So 40 cents of every dollar I put into this will go into across this fund, and then this fund further distributes it across these companies. So right there, you're getting into Apple, Amazon, Berkshire, back ties into Warren, Microsoft. Yeah, and you can see the rest. I'm not going to go through them all. Toyota, Samsung, a lot of big names. These are just the big holdings within each fund, and it's a nice little breakdown that they do. And then this is my account value, down 4 cents. Not bad. They give a nice little simple line graph, show you what your account's been doing. It's not bad. So we'll see. I'm excited to find out after months and years in different markets which one of these is going to stand out the most. And then that brings us to the last one, worthy bonds. This is the one I'm most unfamiliar with. Started seeing a few people talk about it on Twitter that I follow. Looked into it and was interested. You give them 10 bucks, they give you a bond, and they pay you 5% interest on that bond daily. Right away, bonds it's very different from Stash and Acorns because These are bonds that are being made to small businesses, and even so they're making business loans to both public and private real estate, small companies that they talk about that they're trying to grow. So they're going to have little correlation to the stock market. It's definitely a diversification. It can be more safe than stocks, but it will not have the explosive growth potential that stocks do. But if you're in a bad market, a lot of people fly to bonds. They want to be invested in bonds. So yeah, this is interesting. Worthy bonds. They call it worthy because they appraise the potential borrowees' assets, and if they were to liquidate them, so if they had to sell everything, they make sure that those assets would be able to cover the bond. So it's less risky. It's a pretty safe bond so that you're funding the money that they're loaning out to these businesses. So there's no fees, which is pretty cool. They charge no fees and there's no minimum account balance. And they make their money from the revenue of the loan that they make, and then they kick you back a small percentage of that as well. Each bond is $10, pays 5% interest, which is fixed. It's not going to go up. It's not going to go down. They credit that every day, and it compounds immediately. Yeah, so yeah, you can cash out at any time. They last 36 months is how long the loans are that they make to the borrowees. If you have over 50,000, which I'm not sure how many will, it might take up to 30 days to get your money, but that's nice to cash out anytime. Same as Stash and Acorns, they round up. Interest accumulates. It did accumulate until 10. See, that's how old this. I made this card about a week ago, and they literally just changed this. So that is different. Recurring investments of $10. That's the minimum that you can do because that's what it takes to buy a bond for a recurring investment. It's not FDIC or SIPC backed, so it's a risk. Anything's a risk though, but we have to take risks though. But from what I looked into Worthy, you can look at it yourself. They have a reserve fund. If a borrower defaults, they're still going to get you your money. So it's a nice diversification away from stocks if you want to be in something a little safer. It's very, very hands off. They yeah, so you can see they're supporting fellow humans. They like to tout that. Definitely interesting. I mean, if you don't want a lot of risk and you just want to start making that money while you sleep, pennies at a time, definitely check out Worthy. This is my account after almost 2 weeks. I'm up 7 cents. That's the interest I've made. So with this Worthy Pure Capital and Worthy Pure Capital 2, they allocate $50 million in loans, and I guess they just hit that. So that was Worthy Pure Capital. I got on the tail end of it, and then they open up another 50 million in Worthy Pure Capital 2. So it's going to be split here in between the two. Yeah, any questions? You just check out their site. They explain this all pretty well. And then this is my daily interest report. So I think I'm making almost it feels like about a penny a day. I'll verify that later. But yeah, they give you that. You can toggle it for monthly, yearly, whatever. And then this is the race, the great race. This is what I'm most interested in. So yeah, Stash is a little bit down, but that's because I screwed up and I didn't put in the correct amount to get that to $50. That was week 1, started out there, and by the end of week 2, we're already at so Acorns is taking the lead. But it's not all equal because obviously I've put more money into that. So I believe coming up this week I'm going to be getting 2 bonds. So Worthy bonds will bump up to $60, and then I'm putting another 12 into Stash. So we'll get them there. Little bit rough out of the start, but yeah. And then this is the main chart. These won't be as long in the future. And then I had to throw this slide in there. There's always a risk of loss. I'm not giving any advice. I'm not telling you to buy or sell anything. This is just my opinion. You need to assess your own financial situation. Talk with a financial advisor if necessary. But I'm just a hobbyist. This is something I am interested in seeing what happens. And just remember, if you invest, there's always a risk of loss. All right, well, thanks for stopping by, and I hope you join me every week. And these videos aren't going to be as long. Going forward, they're going to be more updates. This was more of a just getting it out there, showing you how I set it up, familiarizing you with me and how I'm running everything. I'd like you to I guess I'll give the obligatory like and subscribe and point down here and give the thumbs up, and I'm not going to put all the popping up thumbs and all that stuff. You guys know what to do if you like something and you want more of it. And now the disclaimer. So I am not a licensed financial advisor. This is not financial advice. You need to assess your own risk. You need to assess your own situation and your own finances. Everybody's different. You need to speak with a licensed financial advisor before you invest money into the stock market. You need to educate yourself. So this is not financial advice. This is just my opinion. This is just me sharing my hobby, my investing hobby with you all. And we're going to see where it goes and what comes out of it. All right. I hope you'll be back next week to see what's going on. And thanks for investing your time with me.